Everyone, it's Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Happy Black Friday, everybody. Hopefully everybody had a great Thanksgiving, got to spend some time with family, friends, and loved ones. Black Friday is a big deal for the retailers, and we'll talk about that a little bit later on. In fact, if you take a look at the stocks you see on your screen right now, these are the ones that will be featured in this video. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. All right, let's take a look at the market. We had a low volume week, as we talked about. We wondered if we were going to have the seasonal trend of where you drift higher on a low volume week, or the other thing that can happen on low volume is added volatility. Well, we didn't get the added volatility. We got the drift to the upside. So we're continuing higher. Still no five-wave impulse pattern that's been labeled, but we're getting awfully close to those July highs. Are we going to get there at the beginning of next week? I think Monday is going to be really interesting. As I've mentioned before, a lot of traders, if they've hit their benchmark against the S&P on performance, they tend to just take the rest of the year off. But those that haven't come in and try to chase performance because they want their bonuses at the end of the year. So those advisors that already hit their bonus, they don't want to risk losing it, so they just take holiday. So volume will tend to be better than it was this week, but not quite what it was going into the Thanksgiving week. That's how it usually works anyway. But if we do get the volatility, then we'll see some volume come in with that. Looking at the 10-day moving average, you can see we're still just a little bit overbought, real tiny bar there today. And if I bring the volume in, you'll be able to see clearly there's that low volume this week. And of course, today being only a half day in the markets, abnormally low volume bar there. But yeah, the market is 1 o'clock. So low volume, rise to the upside, still have the gaps to worry about. Those are concerns. Not a whole lot of economic news is going on right now, but there was an interesting story that came out today that I thought I would share with you. It's a big football holiday weekend, and there was a story that said ticket prices have gone up 25% just in the past year. And if you take a look at this graph, you can see that it's really just been in the last few months. So there's the influence of the NFL with those big spikes in tickets. Now, how long is the consumer going to be able to do this? So we're talking about overall inflation coming down, but there's still areas where the consumer is feeling it. And in the article, a person talked about how they used to go to 4 to 5 games a year. Now they're only going to 2 because of the increased costs. So inflation all over the place, even in the world of sports. So back at the chart, can we hit the 460 level? That's going to be the question next week. I still have my concerns about the gaps, as I mentioned, the separation from the 10-day moving average and the vertical nature of this move. I do think we're set up for some sort of a correction, and that's an impulse move. As we talked about last week with no five-wave labeling, that's a primary impulse. And so whether or not it's a zigzag pattern or some other sort of a pattern being formed, even a flat, whatever is going to happen, a triangle as well, there still has to be a corrective move. And so I think we need to watch out for that sooner rather than later. Makes me real nervous. I think you need to be very choosy on your long positions. We've had a lot of real quick in and out positions over the past couple of weeks, 1 to 3 days, and take a little bit of a gain off this move and then get out and watch. If we take a look at the 10-year in the bond market, notice that we did bounce in rates today. So unusual move there, back to the upside. But not so unusual because the wave 4 is right at the 38.2% level. So if we were going to bounce, that's a logical place. But the gap is where the concern is. But you can see we also have a little bit of support going back there on the rates from August and September. But a little bit of a gap bounce up. Is that the start of the wave 5? That's not going to be positive for the equities market, especially not on the tech stocks. We'll look at the Qs in a minute, as we always do. So a little bit of a change where we kind of just been coming down for the last 4 to 5 weeks. First real noticeable move back to the upside here. And that's, again, add that into the mix to be concerned with. Looking at the dollar is doing its job. It's helping. Did bounce a little bit here recently, but right off of 50% wave 4 correction. So as I talked about in the past week or two, if we do start to get these wave 5 bounces, both in rates and the dollar, going to be very difficult for the equities market to continue this move to the upside, especially if it is on lower volume. Here's another concern. The VIX. The VIX broke 13 down into the 12s. Even right after the market closed, it dove down more. It's down under 12.5 at the time of this recording. We'll see if that lasts into Monday's open. But there's that 13 level that's acted as support, as you can see. Every single time we've come down here over the past 6 months or so, we've bounced back higher. This is the first time we've kind of really tried to break the 13 level. We did for a brief day over on the 14th, and then the next day it was right back to the upside. So we've had 3 closes in a row below 13, but again, on a holiday shortened week, along with low volume. So does that give us a signal that the VIX is going lower, or is it just a byproduct of that drift higher on low volatility? Clearly lower volatility, but it's a concern as far as, can the market continue the move to the upside? I'd really feel a lot better if we had a corrective move before we try to do anything long from here. Looking at the DIA, you can see that we had a big move to the upside here. We had one of our international subscribers Tuesday night asking if this was could we take a look at the US 30? And it took me a second to figure out they were talking about the Dow. But here's the DIA with this vertical move to the upside. Very similar chart to the SPY. So it's good that the two are in similar patterns, but not so good that they have gaps, separation from the 10-day moving average, and gaps. So none of that's good. And then we look at the Qs, which we talked about before, that had taken out its July highs. It's the only one that has done that. And now it looks like maybe we're kind of going to test this. A little consolidation here from that last move. Still no 5-wave pattern here either. And so a big impulse move and pretty good size gap there. The gap's down here. So the charts are all very similar now, which is always nice. It's bad when they get all discombobulated because which one's going to win. They're all going to come back into some sort of alignment at some point in time. But are the Qs ahead of things with the fact that we are going to break those July highs? Or are the other markets correct that we're just going up to test them and then we're going to come back and perhaps the Qs just got a little bit ahead of themselves? There's the 10-day moving average, little separation, not great, but really kind of sideways the last 4 days after that big move that we had there on the 20th of November. Looking at the Russell, the one pattern that is in a 5-wave impulse pattern, and it's to the dead, as we've been talking about, and a pretty strong wave 4 level there, right near the 61.8% fib level. So a bounce up, logical place to hold. We do have a very small ascending triangle right here. Now remember, that doesn't mean it's going to break to the upside. I know there's a lot of information out there. I talk about this every chance I get. It's easy marketing, but it's not how it plays out, where an ascending triangle means you're going to break up, a descending one means it's going to break down, and a symmetrical one can break either way. Any of them can break either direction. A triangle is a triangle, and we could break to the downside out of this just as easily as the upside. Now, if we do break to the upside here and start to take out this wave 4, being at such a strong level, 61.8, then we might have something going on with the equities markets as far as continuing to rally through the end of the year. I think that breakout there is going to give us a good idea on risk. Stock to talk about this week, obviously, NVIDIA. And we had a couple of questions about this on Tuesday night during TradeFinder. We do TradeFinder every Tuesday night at 9 p.m. Eastern Time. It's free. We take a look at the markets. We look for trade ideas, and we have a live Q&A. If you haven't registered for it, you can do it on the link provided there. Sure love to have you at next week's TradeFinder. Our community that watches is great, and they're always reminding, hey, hit that like button, for Rob. And as we do appreciate that. Hit the like button, become a subscriber. We do have something new to talk about. I said we'd make an announcement this week. We are going to start at the beginning of the year giving away one subscription every month. We gave 4 away when we hit the 40,000. So again, to enter, all you have to do is leave a comment underneath the video and you'll be entered. We're going to start the drawing for January in this recording. So if you leave a comment on this one, you'll be entered for the January drawing. And then we'll give away one of our alert subscriptions to ewotrader.com each and every month. And that's our thanks to you guys for tuning in and helping us to grow the channel. We appreciate it. All right, so NVIDIA just blew the doors off the earnings. It's amazing how they can just continue to do that. Tripled their revenue on the AI side. But then they announced today that they're going to hold back on the AI chip for China due to the U.S.'s export regulations. And that sent the stock down a little bit more. So even though we had a great earnings number after hours on the 21st, we were down a little bit yesterday. Looks like a little bit more profit taking than anything else, but we do need to kind of hold this area right here around 480. And the reason I say that is look what's below there. See how vertical this move was to the upside here? So if we break below 480, there's not much to hold it before we start looking at possibly coming all the way down here towards 400, which is where the previous 4 is. So we've tested the previous wave 5, and we have a fairly vertical move. So 480 is crucial next week. So keep an eye on that for all of you NVIDIA fans. And as I said, Tuesday night's TradeFinder, it is a common stock to ask about, along with Bitcoin and Coinbase that we're going to talk about now. Bitcoin hanging in there on this rally. As I've mentioned, I still have a little cautious viewpoint based on that vertical move, but we are consolidating nicely, broke up a little higher, consolidating that as well. Perhaps it can continue to run. The algorithm, the Elliott wave algorithm does like that level around 42,000. The question is, do we have a corrective move first? So come down here. And this is just telling us if the wave 4 was to begin now, that's where you could expect some support. So does that occur first, or does the run to 42,000 occur before some sort of a corrective move? But pretty impressive with Bitcoin. And I've mentioned in the past, and y'all know this, you watch each and every week, that if Bitcoin continues higher, it's probably going to drag Coinbase with it. And how about that move in Coinbase? Hopefully you've had a part of that. Although it is getting awfully vertical here too, and there's a separation, especially from today with that 10-day moving average. A little bit concerning that it's gone so vertical. Hate that. Perhaps we're going to get a little bit of a correction out of Bitcoin and Coinbase next week, or same scenario here. The algorithm likes the 130 price, so the wave 3 could run there, or we could correct first and then go there, and the stock is going to tell us if that wave 4 labels, then we know where to expect support. If it doesn't, then perhaps we could see 130, but that's awfully vertical on that move. And if remember, we said as long as we held 70, you could stay long Coinbase. So I hope you followed along with that. And then if we got above 80, we could really have something going. And that's exactly what's occurred with that big move and taking out those July highs on Coinbase. So we've had the Qs and Coinbase take out their July highs. Pretty impressive. Now, as I mentioned at the beginning, it's Black Friday, and going to have a lot to do with what happens with the retail sector over the next couple of weeks when the numbers start coming back, especially talking about Amazon, the king of the retailers. The wave 5 is right here at a 61.8% extension. That's going to be a little bit of resistance, and it has been. You see, we've kind of gone sideways here. And note, we do have a little bit of an ascending triangle here as well on Amazon. So once we start getting the numbers in, the early Black Friday sales numbers from Amazon, Again, that's going to have a lot to do with the retail sector, especially after what happened with Walmart. Walmart had their announcement. They had good earnings, but they were very cautious on guidance. Here's Costco. We mentioned last week that after Walmart's guidance, Costco took a big move to the downside. Now it's crept back and gotten almost all of that back after the drop. But that drop down, again, was right after Walmart gave their cautious outlook. Costco has their earnings coming up in a couple weeks. And so we'll see if they're had the same concerns that Walmart does. But people viewed that as a buying opportunity for Costco. So they stepped in and bought as we move back up. And so we're, again, almost back to those highs. But, you get this vertical move. I always talk about this. What goes vertically up often comes vertically back down. And what was it? Walmart's news was what gave it the trigger to go vertically back down. We're awfully extended on that wave 5 here at 167%. So, again, cautious on a continued move to the upside on Costco. And I believe that once we start hearing the numbers over the weekend, will have a lot to do with how Amazon and Costco, all those big retailers trade beginning of next week. We hadn't looked at Tesla in a couple of weeks, so I thought we'd take a look here. We had this triangle way back here that we had that big downside breakout on Tesla. And now it almost looks like we're kind of forming another. Once again, no 5-wave, Elliott wave pattern labeled there. The software would label the ABCs, but I prefer to draw the zigzags, the triangles, the flats, and stuff by hand. And so that's why I don't have that button turned on. But it'll do it automatically if you prefer that. So we have resistance here at 240. We filled the gap. So there you go. Another one of our rules. Gaps get filled. So we came right back, filled that gap from the gap down that occurred here on the 19th of October. And as you can see, with 240 acting as resistance and this climb up of higher lows there, we have an ascending triangle on Tesla as well. So a couple of things happen when you have a triangle breakout. If you have a gap, it usually gets filled. The breakout usually is around the same distance as the mouth of the triangle, in which I think you would agree that's about exactly what that downward move was. And then we came up and filled the gap, and oftentimes the breakout of a triangle gets retraced, which would give a potential target around 260. At some point, we're probably hitting 260 on Tesla, because that was the point of the triangle, or somewhere right about there. But can that do that at the beginning of next week? Or is the market going to kind of give us a little bit of volatility next week? With the VIX below 13, I do expect some more volatility to creep in over the next couple of weeks. And last but not least, our friends in India, looking at the INDA, not much to talk about. It's just kind of gone sideways here, finding some resistance here at 45. But if you're long the India market, whether it be the INDA or the Nifty has a little bit different pattern, very similar, but a little higher, already breaking the highs from September on the Nifty. But I know a lot of people like the INDA as well. This wave 4 right here has held right at that 38.2% fib level. And then we've run up, and we're hitting that, bumping our head against that resistance there at 45. So we'll see if we can break above that. If we look at the 10-day moving average real quick, you can see it's allowed that 10-day moving average to catch up. So we're no longer in an overbought scenario there with the INDA. And that could be some energy here to break above 45 and take off. Remember, we need a break above 45 with follow through. And if that occurs, then we could be completing that wave 5 up till this level. But 45 is acting as pretty good resistance, so it's got to do it first. Right now is resistance, so it has to do the old Missouri thing. It's got to show me. So thanks again for your attention during this holiday Black Friday recording. Hope you enjoy your weekend. Eat the leftovers from your Thanksgiving meal, and we look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.